I'm Sarah, a tutor at Accountancy Learning, and in this video I'm going to take you through the Financial Accounts AAT Sample Paper 1, Task 2. So this task is all about recording period end adjustments. So we're told that Alice owns a business which provides cakes for corporate clients. We're preparing her year-end accounts for the year ending the 31st of March 20x8. And Alice is registered for VAT. The first part of the question asks us to identify which one of the following should not be included in the valuation of inventory at cost. And we're given 4 options here. So when we're thinking about the valuation of inventory at cost, we're thinking about all of those costs that have gone into making that product. So let's go through each one and decide whether it should or should not be included. Cost of purchasing the ingredients. So in order to make a cake, we have to have ingredients. So without those ingredients, we wouldn't be able to make the cake. So therefore, we should include that in the cost. Carriage inwards of the ingredients, so the delivery costs of the ingredients. So again, similarly, if we didn't have the ingredients, we wouldn't be able to make the cake. So therefore, we've got to pay delivery in order to get those ingredients to us. So in order to provide those ingredients, we must include that as part of our valuation of inventory at cost. The third one there is labour costs to cook the cakes. So we need the bakers in order to make cakes. So without those bakers, the cakes wouldn't be produced. So therefore, we need to include those labour costs as part of the valuation. And then finally there, you can see by process of elimination that this is going to be our correct answer. But why? So this is the key term here, is that it's refrigeration costs for the storage of the cakes. Now the cakes in themselves are the finished product. So anything related then to the finished product shouldn't be included in the valuation of inventory at its cost. Only those things that go into making the product should be included. So these refrigerations for storage, those costs for that refrigeration cannot be included. In our next question here, we are told that an accrual should have been made for rent. And then we're asked to identify how the following elements are affected by that omission. And we're given these 2 elements here, assets and profit. So to start this question, let's have a think about the journal that would have gone through to put in this rent cost. What would that accrual journal have looked like? So we would have debited our rent account and we would have credited our accrued expenses account. And now having those out, this is important because now we can identify what type of account they are, and then we can have a look at how those types of accounts then affect the elements we're given in the question. So for our rent, for the debit that would have gone through, that's one of our expense accounts, so that's the type of account. And our accrued expenses is a liability account. So our first element is assets. So is there anything within that journal that would have affected our assets? Well, as we're dealing with a liability and an expense, neither of those 2 affect assets. So therefore, there's going to be no effect on the assets. For profit, however, our profit we calculate as income minus our expenses, put very simply. So with these expenses up here not being included in the accounts, that means we haven't put enough expense in the account. So this figure here isn't high enough. So what that would then mean is that the profit is actually going to be overstated because those expenses have been omitted. Moving on to the next question then, we are given some information regarding the rental income account for Alice's business at that same year end, 31st of March 20x8. We're told that on the 31st of March 20x7, so the previous financial year, an entry of £1,000 was made into the rental income account for accrued income. And then we're told the entry needs to be reversed from the accrued income account into the current year. We're then told that we've got cash book entries for the current year, totaling £12,000. And this includes a receipt of £4,500, which relates to 6 months ending the 31st of July. So now we've got to complete the rental income account for the year ending the 31st of March 20x8 and ensure the account is balanced off appropriately, and very importantly, enter our answers to 2 decimal places. So let's take this step by step then. The first piece of information we're given is related to this accrued income. So that's about putting income into the account from the previous year that related to that previous year. So at the end of that year end, they would have debited the accrued income account and credited the rental income account for that £1,000. And what that did at the end of the previous year was increase their rental income. And now what we've got to do is we've now got to reverse that out. So our first entry is going to be to reverse this, because remember, we're working on the rental income account at all times. So we now need to reverse this, which will then be on our debit side. And you will have accrued income reversal. Now, in the exam, you will have the drop-down boxes in order to select which account you want. We've got 1,000, and don't forget your decimal points, which is even more important when you are working in whole figures, because we naturally don't put 0.00 with our whole figures. So be careful with that, because that's where you will lose some marks. So now we have dealt with that reversal. The next part is about the cash book. So we're told the cash book entries for the current year relating to rental income are £12,000. So we can now put that into our account. So we're going to put cash book here to increase our rental income of £12,000. So we've dealt with that part of the question. Then we're told that that £12,000 included £4,500, which relates to 6 months ending the 31st of July. So our year end here is the 31st of March. So we only really want included up to the 31st of March. So because it's 6 months ending 31st of July, we've then got April to July, which doesn't belong in this year's accounts. So this is 4 months worth that shouldn't be in this year's accounts. So we need to prepay that. So in order to reduce our income by that amount, we need to put it on the debit side. But first of all, we need to calculate how much of that £4,500 we're going to prepay. So this 4,500 is for 6 months. So first of all, we're going to work out how much it is per month and then multiply it by the number of months we're prepaying. and that comes out at £3,000. So this is the figure that we're going to reduce our income by in this current year, and it will relate to the next financial year. So we are then on our debit side going to put in prepaid income, 3,000, and now we've dealt with that part of the question as well. So the final thing we then need to do is look at about balancing off the account. So in the exam, your totals will populate automatically. So you would have a 12,000 total there. And we need to make sure that our debits and credit balance, so we're expecting a 12,000 debit there. So our balancing figure is 8,000. And that's going to be the figure that, because we're working on the year-end accounts, that's the figure that gets transferred to the statement of profit or loss. And that question's completed. Now, for this last question then, we are going to be looking at our doubtful debts. So let's go through the question. So the balance on the receivables ledger control account at the end of the year is 27,468. The policy is to adjust the allowance for doubtful receivables to 2% of total receivables. And we're told that the company only has one general ledger account for both specific and general allowances, and that will come into play shortly. At the end of the last financial year, they put in an allowance based on 2% of the trade receivables at the time. And that figure was 55827. So that's the provision that's already in the accounts from the previous year. And it'll be that figure that we need to adjust. At the end of the year, Alice has asked us to make an allowance for a specific doubtful receivable of 2,380. But she didn't feel like it was going to be paid. And then we need to produce the journal entries relating to the allowance for the doubtful receivables as at the year end. We should journal our specific and general allowances separately and put our answers in at 2 decimal places. So let's deal with the doubtful receivable of £2,380 first of all. So whenever we're dealing with our doubtful debts, we're going to be dealing with an allowance for doubtful debts account, which is our provision account, which is our liability account, and an allowance for doubtful debts adjustment, which is going to be our expense account effectively. So we'll put in here first our expense account. So allowance for doubtful debt adjustment. And because this is not expected to be received, that's going to be an expense to us. So that is going to be our debit into the allowance for doubtful debts adjustment. So the opposite side to that entry is our provision account of our allowance for doubtful debts. So this one is your expense account, and this one is your liability account. So this would show on your statement of profit or loss, and this one's going to show on your statement of financial position. So our opposite entry is a credit then to increase that liability of 2380. And don't forget, we've got 2 decimal places. So we can finish that off like that. So now we need to deal with the new doubtful receivables at 2%. So we've got our trade receivables figure of 27,468. And it's very key here to make sure you don't jump in and just take 2% of that figure, because we've got this specific debt here that we've already made an allowance for. So we don't want to do another 2% on that. So we have to minus out the 2,380, which would give us £25,088. So this is our new trade receivables figure. Now we've taken care of that specific debt. Now we can work out what our 2% of that figure is. And we come to a figure of 501.76. But again, at this point, don't rush ahead and put that into your journal. We now need to have a look at what happened last year and then decide whether we're going to have to increase or decrease the provision that's already in the accounts. And that's what this bit here is all about. So we had £558.27 from the previous year, last year's provision. That's already in the accounts, but this is the figure we want the accounts to show. So based on the fact that 558.27 is higher than 501.76, we need to reduce the provision down. So we can do a calculation to find out what our difference is. And that difference is what we need to reduce that provision by. So let's go back to what we're looking at in our journal. So this time then, if we're thinking about that expense account, our allowance for doubtful debts adjustment, this figure here isn't increasing our expense, is actually going to be decreasing our expense because we're lowering the provision. So in this question, our credit is then going to be for the allowance for doubtful debts adjustment. So our credit is going to be for the expense type because we're reducing it. And again, the next part is our allowance for doubtful debts, and this is our provision account. Remember, this is our liability. So again, we're reducing that liability from last year, which then means if we're reducing a liability, we're going to debit it. So that is the last part of the question.